Hey traders, let's take a moment to thank and feature one of our top sponsors, FX2 Funding. If you're looking to get funded, listen up. FX2 is offering traders the chance to trade with up to $200,000 in simulated capital and receive up to 85% of their results. If you're interested in getting started, use the link being dropped in the chat or the link down in the description below. If you pass the evaluation, you'll receive your feedback and gain access to your new account. FX2 allows traders access to a wide range of assets and allows traders to hold their trades over the weekend. FX2 is giving A1 Trading Show fans 15% off the evaluation fee if you use promo code A1Trading15. So if you'd like to learn more, again, use the link being dropped in the chat or the link down in the description below and use code A1Trading15 at checkout for a discount on any of their evaluations. Now back to the show.
All right. Good morning, everybody. Welcome back to another live stream. Thanks for being here with me, taking a look at markets, setups, and turning into here a good bit of market data. The second half of this week should actually get real interesting from here. We talked about this yesterday quite a bit, but we have PMI numbers tomorrow. We have claims, unemployment claims, jobless claims on Thursday. And then we have, to end out the week, we have core PCE, which will be a really important statistic, monitoring how that inflation number is looking in the US. The Russell is flying. This is pretty cool to see. And if you guys are avid viewers of the channel, you know that I have a position open on the Russell. I've shorted puts or sold puts on the Russell. And so it's looking like very likely that we are going to not get filled on those puts, which is basically we just collect premium. So that's looking well for us. We are also seeing the S&P 500 stay strong towards the top of this range. I've been calling for, not calling for, but looking for a pullback on this one. If we do get that pullback, I'll be looking to get involved if I can. We just had the 9:30 open, so market volatility is likely to be a little bit higher here now. We'll take a look, drop it down to the 15-minute chart on the S&P 500. Seems like with a little bit of a blip higher in the opening moments there, and now pulling back here. We're 2 minutes into, like I said, the New York, stock market open. Indices just flat on the day, essentially. We had a little bit of a spike here. NASDAQ just negative here on the day. There's your 15-minute chart. Selling off hard here, at least in the opening moments. It's pretty good sell there. US 30, here's the Dow Jones. Dow Jones, really choppy chart here recently. And I think that, if you're watching indices right now, here's the thing. I am so bullish on indices overall. Like the bull case is really strong. The problem is the bull case is so strong that everybody who wants to be a bull is already a bull, right? The chart is really, really pumped up. Now, that does not mean that it cannot proceed to push higher here today. Let me be very clear. Just because this chart has had a good run does not mean that it cannot have another good run and another good run and another good run, right? You guys know I love the indices because bull runs can be really, really powerful. That being said, despite me being a bull, I don't like the idea. I don't like the risk reward of buying up here. Here's why. Keeping it really simple in the indices for a moment. If you're looking at NASDAQ, this thing has room to pull back. And why? Well, if you get any concern about this interest rate story not being as easy as everybody's thinking it's going to be, right? Some people are thinking cuts are coming in March. I personally think that there's not going to be a rate cut in March, but I could be very much proven right or wrong about that. And I think that idea of interest rate cuts being coming in March is getting the market really excited. And by the way, like I said, I am still a bull overall, but I think that you probably don't see rate cuts as soon as March. And if that does actually turn out to be the case, there's a good argument for a pullback in the NASDAQ as people kind of sober up a little bit from the idea of we're just going to get instant rate cuts here in March. That's my thought process. Also, I don't know what's going on with the chat here, guys, but my StreamYard just doesn't show the chat anymore. I don't know what's going on. I have to pull up actual YouTube in order to see what you guys are saying. So give me 1 second. I'm just going to pull that up. Yeah, so NASDAQ selling off into the open, not much of a sell-off. Let's be clear there. Not a huge sell-off by any means, but we should be good to go there. I've got the chat pulled up. By the way, guys, do me a favor just to make sure my chat, I want to see if my chat is working. Can you guys just let me know where you're tuning in from? Are you watching from the US? Are you watching from Europe, Africa, Asia? Where are you guys tuning in from? Let me know in the chat there. Okay, so we've got several markets to discuss here today. Again, my focus is on the indices overall, but not at these levels. Like I just can't, there's nothing for me to do up here. Simply put, I am an index bull, but I'd like to see that pullback. I really have my eyes on the NASDAQ. To be completely honest, I've been challenged a little bit recently. Oh, there you know what, guys? I can see the chat now. There you guys are. It's just that you guys were staying quiet. Good morning. We got people from Malaysia, Iceland, Hong Kong, Nairobi, England, Germany, Papua New Guinea, Florida, Nigeria. Wow. Good to see all you guys. Thank you for being here. And good morning to you. So yeah, I am an index bull, but you got to wait for pullbacks in these scenarios. Like I can't buy up here, right? I'm chasing. As much as this story is still very bullish to me, I have to wait. I have to be disciplined. U.S. oil, I got trailed out. I'm out of my trade. Took profits on the oil move, and happy to do so. We made a nice little move there. So for those of you guys who watched on the oil trade, remember we caught this pullback here, entered into the market. Price did go against us briefly, but we stayed in the trade and we got a nice pump yesterday. Trailed that stop loss into profit and VIP, trailed out, and we're out of the trade. Is there more opportunity for oil? I think so. I think there's a chance we look to re-enter here. Not necessarily right at these levels, but I'll watch this close because, I still like oil long. So oil is one of my Edge Finder top setups, I believe, or at least it was. Where did it go? Let's go to neutral. Oh, no, it's there. Sorry. Let me, we just had to refresh the page. So oil, US oil, getting a bullish reading on the Edge Finder. And let's break this down a little bit. You have COT, so smart money, seemingly a little bit more preferable to oil. What I don't like is retail traders are very much bullish on oil right now. We can actually see that when we go over to the retail positioning. We see oil here. Look at this. This kind of creeps me out a little bit with the oil side. You have a contrarian sell signal because retail traders seem very bullish on oil. So that has me a little bit cautious. But again, here's the thing. A lot of times traders will watch a video or two of mine and they'll see like, oh, retail positioning. So all you do is you just fade retail, right? Wrong, because sometimes retail traders are actually right. I know this can be confusing, but trading is all about probabilities, right? And if retail traders typically lose, that doesn't mean they always lose, right? Even I don't know, there's, they say, my dad always said this when we were growing up. He said, even a blind squirrel can find a nut eventually, right? So it's one of those things. The idea here is that just because retail traders are bullish on oil does not mean it cannot go up. But so that's why the point is I don't put too much emphasis on one indicator. And guys, this is what the Edge Finder is all about. Traders inherently put too much emphasis on one indicator and they get frustrated when that one indicator fails them. And by the way, I'm not talking about price action indicators, although that could substitute for the same thing. I'm not talking about using a MACD. I'm not talking about moving average crossovers. I'm talking about any, fundamental indicator, sentiment indicator. Do yourself a favor right now as you're listening to this. Do not overhype any signal whatsoever. I'm not talking about order blocks. I'm not talking about moving average crossovers. I'm not talking about price action. I'm not talking about COT. I'm not talking about put call ratio. What I'm telling you is every single indicator is imperfect. The effort of the Edge Finder is to combine many indicators to help us to get a little bit more clear of a picture, right? Because look across the top. These are all the indicators that we really like to watch. And you'll notice they're not MACDs. They're not, hammer candlestick patterns. Although those things can be helpful. What we focus on is the stuff that really actually moves the markets, which is the fundamentals, right? We're on a campaign this year. We are. Oh, yep. Thank you for this, by the way. Even a broken clock is correct twice a day. Yes, that's the key, right? Don't overhype any single indicator. It's really important, okay? My effort with this is to show you guys something, okay? Fundamentals move the market. This year, I'm going to try and convert more people to the fundamental side than I ever have before. And let me ask you guys, can we try something in the chat really quick? If you're part of the fundamental army, maybe that's what we call it. I don't know, the fundamental squad, the fundamental army. What do you guys think? We'll take name recommendations from you guys. What should we call this campaign we're on to get more traders to look at the fundamentals, which really move the markets, right? This stuff is genuinely what macro hedge fund managers look at. And no nonsense. You know, hedge fund managers are not looking only at price action. I'm telling you what, like I've interviewed lots of them. They look at real world stuff. So let me ask you, what do you guys think we should call our fundamental army? And if you're part of this mission with me, where we're going to try and get more fundamental than ever, type me in the chat real quick. Let me just see if you guys are in the crowd. If you guys like the fundamentals, if you want to double down and really understand what drives the markets this year with me, type me in the chat. Let me know. Let me see that you guys are in the audience. Fundamental conversion squad. I like that. That could be something. Fundamental squad, fundamental army, fundamental degenerates. We could be degenerates. No, let's not be degenerates. That sounds terrible. But good to see a lot of you guys are in the audience. So cool. Yeah. No, so the reason I'm so adamant about this topic is because so many traders, they don't even consider what's really behind these market moves. They just look like, oh, look, a candlestick pattern. And there's so much more to markets. I think it's disrespectful to assume that, you know, it's just technical analysis, right? There's so much that goes into pricing markets, and understanding the story can be really, really helpful. So let's look at a couple markets here. Again, I talked about the indices on the open. I am still bullish on oil, but I did get trailed out. So my dotted line here, that represents where I did trail out of my trade. So I caught this move from here, and I would like to see this thing, you know, keep going. I'd be happy to re-enter. If it leaves me behind and kind of gives me a breakout retest, I'll look at it a second time. But trailed out here this morning, so we'll take the gains and maybe come back and play it again here later on. The dollar index is actually trading up. It's holding the support level that we called out on our last few live streams and in videos, by the way. We've been talking about this level here. And we tried to look at this, guys. Let me also be clear. I don't want to come across or sound like I am bashing price action in any way, because you see my charts, you see that I've got zones and drawings all over them. So I'm not saying by any means that technicals are not valuable. I'm saying that they're not the only thing that really is important to look at. So from a technical perspective, look at this dollar move. Huge, wonderful breakout. On my chart here, it's even showing a gap. You guys let me know if it's showing a gap on yours, but we saw a gap here on the 4-hour chart, launched up, held support, right? Held support, tried to break support. Look at this. And buyers really came to town. So, I mean, it seems like the dollar bulls are here for the short term. And I've been converted recently because of all the strong economic data. Now, speaking of economic data, Wednesday, Thursday, Friday, we've got a string of very important economic data, which we will be covering on the live show. And if this is your first time on the show, tomorrow we've got a really, really important one lined up for you. We get PMI numbers out of the UK, Europe, and the US. And I really, really encourage you, if you have not already, subscribe to the channel you're watching on, but also hit the notification bell next to the subscribe button so that when we go live, you get notified on your phone so that you can come join the show. Because sometimes we change the times of these shows based on what news is coming out. So I just want to be clear, you know, you can avoid missing the shows just by turning on the notification bell. So yes, we'll be very, very interested to watch to see what this dollar index move. Can we actually get a breakout across the tops here? If this happens, right, likely what that means is likely we start we started to see some strong economic numbers, right? And we have PMI numbers, which is, of course, production. It's how the economy is really doing. PMI numbers are a really key metric in that regard. And the U.S. dollar bulls, they want to see that U.S. economy stay real strong, and that U.S. economy staying strong likely causes the dollar to pump up. And as confusing as it may be for beginners, that strength actually will likely, this is hard for even me after all these years. Economic strength could put a little bit of a damper on the stock market, because what that means is it could take away the idea of interest rate cuts. But a strong economy is also pretty good for stock earnings, and stock earnings are really key. So in my opinion, this year is the year of good news is good news. We're back to what makes sense. And if we see strong economic data, I'm going to stay bullish stocks. I don't think economic data staying strong is bearish for stocks like it was in much of 2023. Why was it bearish? It was all about the rate cuts, right? We now know rate cuts are coming. We want to see the economy stay in there, and we want the rate cuts, in my opinion, to be because we can, not because we have to, because things are really slowing down, right? Something to think about. Guys, we're going to bring in Frank, who's been really helpful on this topic here in the last few weeks. We've really been discussing, rate cuts and what's coming and what that means for the dollar, for gold, for indices. It's going to be a really interesting couple weeks. And right now, to help me out with that, we'll bring in Frank. But real quick, we're just going to thank our sponsors who make these shows possible. So check this out, stick around, and we'll be back with Frank, and we'll be going over some markets together. So coming in right after this.
Attention A1 Trading Show fans. If you're interested in getting free access to the Edge Finder or our premium trade alerts, listen up. For a limited time, our show's partnered broker Eightcap is giving out free access to our products when you sign up for a new trading account with them. If you already have a broker, you may want to consider switching to Eightcap because of their low trading costs, a wide range of trading assets, and their amazing customer support. If you'd like to get access to our software and Discord server for free, click the link being dropped in the chat right now and ask one of our team members for more information. Don't miss your chance for free products and an award-winning broker. Now, back to the A1 Trading Show.
All right, and there he is. Hey, Frank, what's going on, man?
Hey, how's it going?
Pretty good. So, Frank, I think you were listening to just that last little bit I was talking about, PMI numbers and economic strength potentially being just fine for stocks. What do you think about that? I guess tomorrow we do get PMI numbers out of Europe, UK, and the US. What are you wanting to see from those numbers?
So I guess I'll start with Euro. They're coming out with the first round of PMI data. For stronger bullish sentiment on a currency, you'd want higher PMI numbers.
Right.
Good economic data is good for the currency. Higher inflation is too. And just seeing the forecast for Europe is higher in manufacturing, but actually the services is also higher too from the revised number, I guess. So what you want to see in all of these is higher numbers for, I guess, dollar strength, if that's what you were trying to trade. But if you're looking at gold or, stocks, let's do gold first. You could see lower PMI too, and that would still be a good sign for gold. Just slowing in any kind of economic activity is good. Usually a good sign for metals, but a lower PMI for like the stock market would not be a great sign either. Right. So it's kind of mixed. I think as long as the number isn't too far in either direction, then we're going to be okay. But anything under 50 is still a contraction. So if we see 47.8, it's still, nothing's really changed, but we're still in a contractionary sort of environment.
Yeah, and Frank, I've got our chart up here on the Edge Finder. I thought this was kind of interesting just to point out. So this is our PMI study on the Edge Finder. For those of you guys who do have the Edge Finder, just head over to the Economy tab and you can click on FX pairs/gold. And what I'm looking at here is just how the Edge Finder actually scores incoming PMI data. So for those of you who wonder, how does that Edge Finder's algorithm actually work? Our thought process is exactly what Frank is pointing out. PMI numbers being hotter than expected is generally considered bullish for the currency. And so when you're doing currency pairs, like for example, Euro and USD, we can actually compare the numbers, and that's where we get the bullish or bearish output for the Edge Finder. So in this data is set to update tomorrow, right? Because we get the latest round of PMI data. And so in the last filing, we saw 44.4 out of Europe, which was a tick higher than its previous, which was actually bullish for Europe. And in the US, we saw previously it was 49.4. It came out at 47.9. So we saw a contraction, and that was bearish for the US. That's why the currency pair bias got a +2 in this specific category. So I hope that makes sense for those of you guys who wonder how the Edge Finder scores stuff. It really looks at the data and basically generates a bullish or bearish bias for everything. But again, to your point, Frank, if we get any sort of lackluster data from Europe, whereas we might see strength for the US, that is where it's going to be really interesting to watch. The currency pairs, again, that dollar strength has been propped up recently off of some stronger than expected economic data. So we'll see if that trend continues tomorrow. It should be a really interesting piece of information.
That's also a pretty strong move from the dollar. And
yeah.
I guess for oil's sake too, higher PMI would be good to see. This is GU, hold on. But seeing a higher PMI number tomorrow in both services and manufacturing would be pretty good for oil's case. I don't know if you're still in this trade, but I closed manually before it could come too far down, and then I re-entered.
Oh, nice.
So I'm hoping
I did get trailed out, Frank. I got trailed out here this morning, but watching it to possibly re-enter. What do you think? Or would you re-enter on a breakout of that chart you've got there?
I guess I would. I've already gotten back in, so I'm wondering, it would have to close above that line, I guess, if I were to take another trade, but I don't really mind holding it to see if it will break out, because I'm comfortable holding it below this wedge till about like 70. But yeah, I'm looking for a breakout here, and I will close out and take some profit if I can, and then look to re-enter and I guess change the way I've been sort of trading recently.
Yeah, fair enough. And you also pointed out something pretty key there about gold, Frank, is, guys, we're getting the PMI numbers tomorrow, for those of you who are just tuning in, and those PMI numbers will be impactful to gold. We also get advanced GDP on Thursday. So you have several economic pieces that are going to impact gold in the coming days. I think you can kind of see it being reflected in the price action of gold. If you're wondering why does gold seem to just be ranging, arguably it's because a lot of investors are waiting to see those key data drops that we're getting Wednesday through Friday. And so, when you look at the price of gold here and you say, well, if PMI data comes out hot, right? If you see strong economic data from Europe, UK, and or US, the more strength in those economies that you see, that is likely to cause currency strength and gold to likely drop in that scenario. And conversely, if you get economic slowdown, gold loves that, because what that means is that interest rate cuts could be more likely, and economies slowing is generally people start to look at gold a little differently. So very interesting setup, I think, for gold is if you're watching it, again, this is the 4-hour chart. You kind of have this range bound market. If you're watching it into the Wednesday, Thursday, Friday from a price action standpoint, I'd say your levels to watch are this 2020 mark and this 2000, let's call it 2037. A break in either direction could really be interesting to see if it's going to continue, because likely what gets it to break out of this range is some decisive economic data. Would you agree, Frank? What do you think on? Do you think there's like a? Do you wait for the news in order to make a decision on gold?
Yeah, I just can't really find a reason to buy gold right now.
Yeah.
I'm looking at dollar and seeing how strong it is. I think the move isn't done yet, unfortunately. I think GU, like the major pairs, are gonna probably continue to fall here. But it's hard to say with gold because it didn't pass the trend line test, and now it's coming down, and I was saying if it doesn't make its way back up over like what was this mark, the 2060s or something, that it might come down all the way to like the 1970s. So right now I don't feel like there's a strong reason to buy gold. I think it's going to have to maybe complete that move before you get back to a good support level.
Yep, fair enough. Yeah, I think gold just for me is the same way. You're getting a good short-term argument for strength in the dollar, and anytime that's really happening, it's hard for me to justify gold bullish setups. You know, barring the idea that maybe you get some sort of like geopolitical uprising or some event. But again, we can't trade based off of what might happen geopolitically. I feel like that's the sort of thing where you have to just kind of lean into the data, lean into the numbers. And if something geopolitically comes along, then you adapt, but you can't really predict that stuff. So that I find is the, you know, if you're asking me about, you know, where are you going to make your decision on gold, geopolitics or economic data, I'm always going to lean economic data because that's something we can actually kind of use to our advantage rather than geopolitics, which we just have no idea what's going to happen. So good points there on gold. And Frank, I want to thank you for coming on. Thanks for giving your 2 cents on what's going on here in the market today. And we'll catch you back on the next one.
Okay. Thank you.
See ya. All right, guys. Yep. Always good to have Frank's weigh in. He's a fundamental and technical trader. He's actually the other trader within our VIP group. And Frank and I share all of our trades inside of the group. If you don't already have access to this and you would like to get the trades sent directly to your phone or to your Discord or to your desktop, we do offer a Discord server where you can see the trades that we are taking in full detail. And if that is something that you would like more information about, we'll drop a link right now to speak with someone on our staff about getting access to this. So we've got a couple people who are standing by. You'll be talking to a real person when you click this link. Send them a direct message and ask about this, and I'll show you something while we're on the line here. Let's just go to this. That link, where does it take you? It takes you to our chat window. Very easy to speak with someone on our team. And if you click VIP signals/discounts, you'll get some really nice discounts because you're watching the stream right now. So click that link, speak with a person on our team, get yourself a membership if that is something you're interested in. It's a great time to do so because we've got a ton of market data coming out the rest of this week. And let me say something too. A lot of traders don't like when news is coming out. They say, oh man, that just means I can't trade those days. Here at A1, we trade way more during news events because if you understand news, it shouldn't scare you. Right? If you're managing risk, news should actually be a wonderful thing because if you understand fundamentals, news helps you to understand what could be coming next, right? Think about, I want you always hear, let me know if this makes sense to you, but everyone in the trading space, they always say, oh, just avoid news. Don't trade during news. Don't trade the day of news. Don't trade an FP day. You hear that everywhere, these little mantras. What I would encourage you to consider is that if you're trying to become a fundamentalist, like you're trying to understand what actually moves the markets, lean into news. I'm not saying gamble on news spikes. I'm not saying that at all. I'm saying understand news events and learn to trade them with them on your side. And they're incredibly, incredibly powerful. So again, we will be trading throughout the news events. If you want to see us doing that if you want to look over our shoulder during news events and trade alongside us, I'm telling you, get a membership, come join us. It's a fun time in the Discord whenever the news is coming out because we trade it live together. So if you'd like to get access to that, there it is. Click that link, send us a DM, and we'll get you that stream discount while you're with us here live. Indices still flat here on the day, 0.07 gains for the S&P, 0.06 for the NASDAQ. Again, I do have my eye on a pullback on the NASDAQ. I like it long, but I've got to get that pullback. I like 17,000 as a possible break retest kind of concept here. I'm still long Russell, which is going very well. Not long Russell, sold puts on the Russell, basically bullish on the Russell. So that seems to be squeezing out some value here for us today. We'll continue to watch that. Let's take a look at gold, because Frank made some good points about gold. And I tried to follow him up with this range. And we were discussing that, you have all this economic data. We're going to be looking for breakouts one way or the other here today, or not today, in the rest of this week, which could give us some nice confirmation. If you get PMI numbers strong tomorrow, watch out, because likely gold will actually be able to break this level. If you get strong enough PMIs, right, that takes the rate cut idea out of the picture, or it could lessen the likelihood that we see rate cuts in March. If that happens, gold probably drops. Okay, so we'll watch for that, because we don't know what the PMI numbers are. But once we get that confirmation, suddenly, that's why I say I love trading news events, because suddenly you're live. Like if you get the news and then you get a pullback, boom, I love that trade. I feel like I have a catalyst, I have a reasoning behind my trade, and then I actually can execute technically, right? That is why we use fundamentals every single day. Speaking of fundamentals, current outlook here on the Edge Finder, you've got a couple currency pairs here. I just refreshed the data, so give it a second here to load. But there we go. We've got some currency crosses, Aussie dollar bearish, Kiwi dollar bearish, dollar CAD bullish. Those are your dollar crosses, which are the ones that I'm most interested in. Let's take a look at AUD USD here, see what's going on with this one. I've been watching the Australian dollar, but it hasn't really given me much of a pullback here. If I drop down to the 4-hour chart, bit of consolidation in this range. So again, kind of same thing setting up for the PMI event. You have resistance up overhead. And you're kind of trying here to possibly break support. This actually could be interesting to watch for, similar to gold. And it's no question, or no wonder that these two charts, gold and the Australian dollar, they typically move together, because the Australian dollar, the Australian economy is a lot of raw materials. And so, the commodities world oftentimes will move in sync with the Australian against the US dollar. Not always, but often enough that it's worth mentioning. How will indices be affected by strong PMIs? Lee, to be honest, that's the hardest question for me, because I actually think that they will be neutral. They're not going to be hurt by them, because it does mean that the economy is strong and that earnings could do well, but it's not going to be great for them, because it could reduce the chances of rate cuts, right? So you get a little bit of a mixed sentiment. But the Australian dollar here, like I said, watching for this breakout here to the downside. If you are a dollar bull, I think that could actually be a trade to watch for, that I will be looking at myself. So I like the Australian dollar on the short side. We're getting that reading from the Edge Finder of -8. It's a pretty strong read. And again, you can see a lot of that data, a lot of that scoring is coming from our economic table data. You can see like you're getting a -2 in the economic reads, inflation, labor market. You're getting some pretty strong favoritism towards the US when looking at the Australian dollar against the US dollar. So an interesting setup to watch going into the rest of this week is the Australian dollar against the US dollar. So we'll be watching that close. COT data, in case you missed it yesterday, let's go real quick, take a look at what institutional money is up to. What are they buying? What are they selling? We keep track on this. This is probably, I think it's the first or second most popular feature of the Edge Finder, and for good reason. This tab allows you to look at what institutional money has been doing on a week-to-week basis. Not guessing, not candlestick pattern, nothing like that, right? We're not guessing what smart money is doing here. We know, because we can see from the filings. Is it delayed? Yes. Is COT data perfect? No. But it gives you a general idea of where sentiment is amongst professional traders, right? Your hedge funds and your asset managers, your money managers, right? So check this out. We're looking at the COT data tab, and we can see here that when looking at the net positioning, long short, we still have gold at the top. You've got the bond market as kind of a bearish read, which I find to be very interesting. The yen also bearish, the Australian dollar bearish, SPX bearish. Of the three indices, it's the most bearish. Nasdaq 100 and US 30. I'm talking about the prominent three, of course, in the US, NAS, Dow, and SPY. So yeah, we're watching this close. But in terms of latest filing, guys, I want to show you this. Look at this. So pretty much everything got sold. I thought this was really interesting and worth mentioning in case you missed the COT data last few days. US 30, pretty sold, and that could suggest perhaps short-term profit taking, which I think is interesting. S&P also got sold. The Canadian dollar, the Australian dollar, sold. Euro and USD all sold. So an interesting filing, to say the least, about the last COT data. We do get the latest data on this Friday. And if you do have a copy of the Edge Finder, remember, on Friday afternoon, you can always go check this yourself. Just click COT data, and then boom, you've got the latest filing on your table so that you can look at what money is flowing into or out of. And sometimes, keeping an eye on this can be very, very useful. If you don't have a copy, remember, you can access this by shooting us a direct message on our website. We dropped the link earlier. We'll drop it one more time. Chat with us if you do want a copy of the Edge Finder. You can speak with us about pricing details, about different offers that we have going on. If you want discounts, if you let them know, by the way, if you chat with them, just let them know you're watching the stream and they'll work with you on the price. We do very much appreciate you guys for supporting our stream. And if you do purchase a copy, you are also supporting it massively. This project is very expensive, as you can imagine, to program and maintain. That's why we sell copies on the stream. Speaking transparently, we live in a capitalist society. These things are not free to build for us, and the team is not free to support this stuff. But we offer a value, I think, to the community in these shows and live streams and videos. And in return, we sell copies of our software. So there you go. Why can't you make COT real time? Because it's reported once a week by the CFTC. You can't get any more real time than once a week reporting. So would be nice. I would love that if you could get second to second readings. We would have them. We'd be fighting for that immediately. Quick look at the put call ratio. And again, remember, I just said, also, yes, thank you. The editor pointed out that updates to the Edge Finder are free after your purchase. And I want to be really transparent. I've been saying this. We are planning to raise prices on the Edge Finder this year. That's not a marketing attempt or anything like that. We genuinely will be raising prices. We're adding so many new features, and every time we add features, our upkeep cost goes up. So with that said, if you want a copy, send us a DM on that link we just dropped. The put call ratio is getting more bullish. This is a little bit of a concern for me. When you get too bullish, remember, that is people basically highly demanding calls. When you get a lot of people calling for calls, right, demanding calls, buying calls, the volume for calls high, that's what we're looking at. That can tell you that sentiment is getting perhaps a little bit too frothy, a little bit too bullish, okay? So maybe there's a little bit of a correction move that could be coming into the S&P, the NAS, and the Dow. We'll watch that real close, but I thought that was really interesting to point out. So yeah. Give you a watch list plan. Kyle, we have some limited offers. If you would like to find out more information, just work with a rep on our team. They can speak with you about different offerings, different features. Again, I can't individually work with you while we're on stream, but you can always speak to someone on my team who is capable of doing that. So yeah, we'll keep an eye on that put to call ratio. I think that's going to be really interesting to watch going into the rest of this week. Yeah. Also, I should mention this. We're doing a giveaway, and we have 7 days left to join the giveaway. If you have not already joined the giveaway, we're going to be giving away one copy to somebody who fills out our giveaway form. If you have not already joined, there's a link that will drop here in the chat for you to fill this form out. If you would like to join the giveaway for free, we'll be giving one person a copy. There it is. Boom. Click this link, fill out the giveaway form, and someone will be winning a copy of the Edge Finder Pro. It's an amazing software, if I can say so myself. We work really, really hard on it. We got some really talented people behind the tool. So more and more data coming to you this year. Get ready. If you're an Edge Finder user, you should be excited, because I am. we've got some really, really cool stuff coming to the Edgefinder. It's going to look, I mean, it looks universally different from where it started, but it's going to look even better by the end of this year. That's my promise. All right, guys, that's going to wrap up the show here for us. Remember, join the giveaway if you have not already. And if you want more Edgefinder details, pricing, or anything like that, send us a DM on our website. We dropped that link earlier. With that said, guys, thank you very much for tuning in. I hope this was helpful to you. Taking a look at markets here this morning. There's plenty to set up for the rest of this week. And I'll have a video up later for you guys to take a closer look. Thanks for watching, guys. Have a great rest of your day.
All right, thanks again for watching today's show. Our goal at A1 Trading is to continue to bring you free value through our daily videos and articles, keeping you up to date with the latest market coverage. If you like our content, make sure to subscribe for more. And hey, I'm going to need you to get out of here. We got some heavy equipment on its way, and you're kind of in the way, so you need to move along. Frankie, that hard hat needs to be on your head.